If you have kids or have ever been around kids, you know that fairness is very important to kids. And when kids grow up, they keep that value of wanting life to be fair. Well, things have not been that fair the last 5 years on this planet, given the amount of central bank manipulation and large money centers, which a large bank is called a money center, all the manipulation they have done. And so there has been very little fairness going on in the world, with the U.S. printing trillions and other countries printing or going into deficit or giving loans in the trillions. Well, we have a new chapter, and this chapter had been getting written, but it is finally out in print, and that is the theme that I want to talk about this week. Now, specifically, I'm going to call this theme Mario Draghi to World. Buy stocks, avoid gold. And if you don't know, Mario Draghi is the European central banker. He is what Ben Bernanke used to be to the U.S. And who Janet Yellen now is to the U.S. Hey everybody, this is RC Peck, and we had some really interesting news this week come out of Europe, and basically it's about money printing and lowering interest rates. Now, what's most important is not whether the European Central Bank should have lowered interest rates, which they did. In fact, some of their interest rates were lowered to negative. So now banks in Europe, if they want to keep their money at the European Central Bank, they're going to have to pay to keep it there, which is a negative interest rate. So Mario Draghi, the European central banker, he dropped interest rates all over Europe, and he put up $400 billion in cash to give to banks if they want to give it away. So money printing and lowering interest rates has fully come to Europe. The question is not whether they should have done it or should not have done it. The question is, how are the markets, or how are specific sectors or markets or assets reacting to that? And that's what I want to show you. And I have 3 price charts I want to show you, and then we'll wrap this up and you can have your weekend. So the first thing I wanted just to look at is the S&P 500, the largest followed index in the world. So yesterday, today is this dot right up here. Yesterday it was announced right here that Mario Draghi is lowering rates in Europe, some of them to be negative, and there's going to be money printing. So clearly the S&P said, hey, money printing in Europe, negative interest rates in Europe, that's good for stocks. So clearly S&P 500, and if you were to look at other indices across Europe, Germany's, Italy's, Spain's, France, you would see all of those indices also going up too. So money printing and zero interest rates or negative interest rates are here in Europe, and that means asset prices in stocks are going up. The second thing, which I thought was interesting, is here's a price chart of gold with the ticker symbol GLD. Now, it initially went up. Now, what I find interesting is gold really fell hard here. Now, could that have been manipulated down? Absolutely, but everything has been being manipulated these days. The stock market, the bond market, the gold market, the currency market, everything is getting manipulated these days. What's so interesting is something that should have shot gold higher, like zero interest rates or negative interest rates, because gold doesn't pay an interest rate, that should have shot gold much higher, but it didn't. When good news shows up as bad news for something, there's still more bad news that has not been priced into the asset. Now, I think gold's long-term trend is up, but right now it is sideways, and its very short-term trend over the last 3 months is down. And I do believe this is because of government manipulation. Again, that's a morality thing, but the price says right now there's more downside to upside. So really Mario Draghi saying buy stocks, avoid gold. Now I have one more price chart that I want to show you, and this is the U.S. bond market. Now this ETF, and I didn't put the ticker symbol on here, is actually BND, which is the total bond market index fund. So it's just a nice general bond fund to look at. And this was interesting too. The bond market fell. The price fell when now it fell before the actual announcement happened here, and yes, it did go up slightly, but the bond market actually fell off. So the bond market probably saw this coming and it moved down. The point is, money printing is being handed, the baton is being handed from the U.S., from the U.S. Fed. They're cutting their money printing down to 0 in about 4 months. And it's getting moved, the baton is getting handed over to Europe, where they have dropped their interest rates lower, okay, or negative. I mean, this is pretty amazing. Negative interest rates are in Europe now. So bonds are down, gold is down, and stocks are up. I have to also believe real estate is going to go up too, because this money printing and 0 or negative interest rate policy is going to make savers get their money out of the bank and put it somewhere. And it's going to be bad for them long term. It's going to be bad for the bottom 98%. But this is what central bankers are doing around the world. It is horrible. It is going to hurt many people's lives. It has already hurt many people's lives. But we can't stop them. We can only adjust and adapt to what's happening. And that's what this is about too. That is adapting to what is happening, not what you want to happen, but what is actually happening. So the point I want to make this week, and maybe there's more than one point, and it's not just this one point on the screen, which is lower rates and money printing equals higher stocks. But what's most important is we have to adapt to what's happening and not what we want to happen. And what's happening right now is we have lower rates in Europe. We have 0 interest rate policy in the U.S. Some rates in Europe are actually negative. Mario Draghi has set aside $400 billion, nowhere near the $4 trillion the U.S. has printed, but he's just starting. That right now is equaling higher stocks. We have to adapt to what is happening, not what we want to happen. And these are just 2 points that I want to take with you, that you can take with you, to help you really get that secure and free future that you want. Until next time, I'm R.C. Peck.